Phil Evans with Bay Area Lifestyle, and today we have a very special guest for you guys. We have Phil Caulfield, who is a loan officer, and he's here to talk to you about mortgage and loans 101. Kind of let you know everything you need to know so that you can understand them better, understand better whether you can get one or not for yourself, and I'll let him take it away. Let's talk about what you should and shouldn't do once you are pre-approved. Okay.
Okay.
So let's do that. So let's do do's and don'ts. All right. There is the magic pen.
Okay.
Yeah. So take it away.
Okay. Well, the one do that hits me right off the top of my head is when your loan officer asks you for documentation, get it into them right away.
Okay.
Because you're on the clock. Typically, an escrow period's 30 days, and every day you waste is going to make it more stressful in the end.
Okay.
So if your lender asks you to supply a letter of explanation because you had a late payment on a Macy's card, get it to them now. Don't wait.
Okay.
So that's the most important do. Get it done quick.
All right. So don't be lackadaisical about it. Like,
Right.
These things have time frames.
Right.
Okay.
Right.
And just real quick, on that note, do loans have expiration dates? So if I get pre-approved today and it takes me 6 months to find my house, do I have to come back in and get pre-approved at a certain point?
Well, every 90 days the documentation expires. So you won't have to update your tax returns or W-2s unless you rolled into a new year. But you will have to update pay stubs and your asset statements.
Okay, great.
Yeah.
Sorry, so that's a little side comment. What are the other dues that you guys should do? Or that somebody should do?
Well, let's talk about the don'ts because the don'ts can really mess things up. Number one thing to not do is don't go out and buy something else on credit. Because even though we've run a credit report, there's a monitoring during the escrow period where the lender will be informed of any new inquiries into your credit, and you'll have to explain it.
Okay.
So if you go out and buy a car and you get a $500 a month payment after you've purchased a home, that could affect you getting approved.
Yeah,
Your
which
final
generally it'll
approval.
give you less to be able to afford.
Correct.
Generally.
Correct.
Okay.
The next thing that most people don't realize is you've got a contract accepted, you've got your money ready, you think it's a good idea to put all the money in one account and then send that money to escrow. Bad idea, because you have to, during the escrow period, you have to track the money coming out of your account and into the escrow. So if the money's coming from 3 different accounts, have that money wired to the title company 3 different times. It'll save a lot of hassle.
Do you recommend before people go in to get it pre-approved that if they have enough for a down payment and it's in 3 different accounts, they do put it in one account?
No.
No, just
Don't-
leave it. Don't try to
move money.
move anything with it. Okay. All
Yeah,
right, great.
that is the #1 stress causer in this business for my clients and for me.
Okay.
Yeah.
Because you look at the history of those. It's not like you can
Well,
do it
because
before you get pre-approved.
we have to track all the movement of money.
Okay. All right, great. So don't move money.
No.
Don't buy anything. If you're buying a house, let's just focus on buying the house. And then after you buy the house, that's when we can go out and get the refrigerator and the new car and all that stuff that might take more credit.
Yeah,
Okay.
and then the last thing is, it's not always avoidable, but avoid changing jobs.
Okay.
So a good example is, especially if you're a commission type salesperson or get a bonus. If you change jobs, generally speaking, if you're in the same line of work, let's say you go from one high-tech company to another, they'll use the base salary at the new job, but they won't necessarily use the bonus income or the commission income, because generally they want to see a 2-year history. And if the jobs are slightly different, you might not get to use that, and that might mess up your qualifying for the loan.
So if somebody goes into a new job and they get a nice increase in their salary and they say, finally, I'm able to buy a house now that I have this new job, should they wait 2 years to come talk to you, or should they just still come talk to you?
Yeah,
and then
definitely
just
come talk to me,
let it
because
figure out?
salary's okay.
Okay.
It's when you get the commissions and the bonus, or if you're self-employed, that's where it gets a little tricky.
Okay, great.
Yeah.
All right. So if you have bad credit, you've just changed jobs, anything like that shouldn't prevent you from coming and talking with Phil about what your options are.
Yeah,
Okay?
we can always talk about options and game plans.
Yeah, great.
Yeah.
And that's probably the best thing to have, right, is a game plan.
Yeah.
Because even if you find out, well, I can't really afford everything I want to afford, at least you'll know what your game plan is.
Right, you can't,
do that.
you can't buy now, but maybe you'll be able to buy 6 months down the road. So let's get a
Okay.
game plan together and figure that
Perfect.
out.
We have Phil Caulfield here, the loan officer extraordinaire. Give us a call. You'll find my information at the bottom. I'd be more than happy to help you find your next dream home, as well as send you over to Phil to get pre-approved. I think that's the one we want to go with. All right, thanks so much.
Thank you.